So welcome friends. Today we'll discuss Aditya Birla Capital Limited. It's a large cap company with a market cap of 45,000 crores and it's holding company for financial services businesses of the Aditya Birla Group. Now Aditya Birla Capital has 1, 2, 3, 4, 5, 6, 7, 8 companies as its subsidiaries. It holds 100% in Aditya Birla Finance, 100% in Aditya Birla Housing Finance, 51% in Aditya Birla Sun Life Insurance, 50% in Aditya Birla Sun Life AMC, which is a listed company. Aditya Birla Health Insurance, they hold 46%. Aditya Birla Money, they hold 74%. It's again a listed company. Aditya Birla Insurance Brokers, in which they hold 50%, and in Aditya Birla Asset Reconstruction Company, they hold 100%. So in Aditya Birla Capital, the majority stake is with one of the group companies, Gresham Industries, wherein they hold 52.8% of the company, and promoters and promoter group hold 16.3% of the company. Now some financial highlights of the quarter gone by. Total lending portfolio crossed 1 lakh crores, which was 43% up year on year and 6% up quarter on quarter. Consolidated PAT was at 649 crores, which was 51% up year on year and 77% up quarter on quarter. Consolidated revenue was at 8,144 crore, which was 39% up year on year. Total asset under management stands at 3.9 lakh crores, which is 9% up year on year and 8% up quarter on quarter. Gross premium stood at 3,877 crores, which was 19% up year on year. The company raised equity capital of 3,000 crores, out of which 1,250 crores was via preferential allotment of the promoters and promoter group entities, and 1,750 crore was via QIP. So some key parameters of the company: under NBFC and housing, the loan book stood at 85,000 crores for NBFC, and for housing it was 14,500 crores. Net interest margin stood at 6.98% for NBFC and 5.11% for housing. Profit before tax was 691 crores for NBFC, and PBT was 84 crores for the housing business. Similarly, asset under management was 2,96 crores for domestic AAUM and 1,18 crores for equity AAUM. Margins operating margins were 22 basis points and PBT margins were 33 basis points. Profitability was 240 crores profit before tax, which was 71% up year on year, and return on equity was 28%. For their life insurance and health insurance business, premium growth was 32% year on year and gross premium growth was 22% year on year. So there were 1,331 branches across all businesses as of June 30, 2023. So as you can see, consolidated revenue grew 39% year on year for 4,632 crores in Q1 FY22 to 8,144 crores in Q1 FY24. Similarly, profit also grew by about 51% year on year. Q1 FY22 profits were 302 crores and Q1 FY24 profits were 649 crores. So segment-wise profitability is as follows. NBFC was up 51% year on year. Housing finance business was up 18% year on year. Asset management's profitability was 71% up. Life insurance profitability was 40% down. and other businesses showed 6% profitability. So they've got a diversified platform for MSME ecosystem. Mostly they process the loans digitally, and they've got an ecosystem-based loan for merchants and resellers on government and private e-commerce websites. They've got various business solutions under their portfolio, like on e-commerce, offline to online discovery. In banking, they have got current accounts as a solution, networking, where new connects can be explored, industry forums. For accountings, they've got various tools like payroll management tools. For content, they've got knowledge forums. For business solutions, they have got tax filing, GST, and business travel. Similarly, they have got various opportunities under ABG ecosystem, where channel finances for dealers, digital journey for dealers, onboarding, limit down, drawdown, ad repayments, and secured lending for dealers' loan against property. So now let's have a look at the financials of the company and some key financial parameters. The company stock price is 171 rupees as of now, and the high that 52-week high that it made was 199 rupees, and 52-week low was 108 rupees. Stock is trading at 18.6 P/E, and ROE of the company is 26.8%. ROCE is 11.4%. Promoters hold a decent share in the company, which is about 70%. Debt to equity is 4.17, which is okay for a finance company. If we look at the price chart of the company, it got listed somewhere in September 2017, and it went down to about 45 rupees 85 paisa in at the onset of COVID, and then from there it has consistently recovered. So it's kind of making a rounding bottom pattern. It stands at 180 rupees as of now, and it can easily go up to 240 rupees in the short term. So if we look at the financial quarterly results of the company, the sales, the revenue has declined a bit from 8,000 crores to 7,000 crores. They have covered it up with decent operating margins. Earlier the margins were 28%, and this time the margins were 36%. And so the net profit grew from 636 crores to 666 crores in this quarter. So if we look at the profit and loss statement of the company for last yearly performance of the company, in March 2015, the sales were at 2,710 crores, which has grown 15 times as on date to 30,163 crores. So if you can see, there is a consistent growth in profit right since March 2015 itself, 309 crores to 524 crores to 691 crores to 693 crores, 811 crores, 866 crores, 1100 crores, 1600 crores, and currently it's at 4800 crores. If we look at compounded sales growth for last 3 years, it was 22%. Compounded profit growth for last 3 years was 76%. Stock price CAGR for last 3 years was 40%. Return on equity for last 3 years was 17%. They are holding a reserve of 17,893 crores with borrowing of 84,738 crores, which is okay for a finance company. And now let's have a look at the shareholding pattern. So majority stake is held by the promoter itself, which is around 70%. FIs hold 10.5%, and DIs hold 7.73%, while public holds 12.64%. So this is it about Aditya Birla Capital Limited. We'll meet soon with a new video. Till then, take care and goodbye.